Welcome everybody, it's Tim or Whispers, and welcome to our first video in the education series that we're putting together for CTC. So today I'm going to cover two things. I'm going to try to do it quickly and it will be a high level view. We're going to be talking about risk management, the most important thing in your arsenal of tools, and we will talk about how to identify key levels or zones. So first off, let's start with risk management, and I'm going to share the tool that the team use for Binance Futures. FTX does have a built-in risk calculation as well, which is fantastic if you choose to use FTX. Otherwise, if you're trading Binance Futures, this will give you some, basically makes it super easy. So the tool is here. It's binancerisk.com/fbinance.php. It's provided by this guy, Trader10, who's got a couple of other really cool things in there, including if you go to more free stuff, you can actually import up-to-date pairs for TradingView. So it has like watch list imports you can use. So when we talk about risk management, we are talking about making sure that you preserve your capital. So let's take an example here. You have $10,000 and you're trading BTC USDT. Now, normally speaking, we will always trade with a risk of no more than 1% of our total account. So this is our total account at 10 grand, and having a risk of 1% means that if our stop loss hits, yes, we always have a stop loss. If it hits, you lose $100. And that's 1%, you're left with 9,900. And that means, say you have 4 or 5 losing trades in a row and you're just off your game, you're only down 4 or 5%. You can take a breather, come back, re-evaluate, and you haven't destroyed your account, got liquidated, or anything like that. Do remember, and you'll hear this from everybody, leverage doesn't matter. What's important is that you're not risking more than 1% of your account, or, maybe you choose 1.5%, maybe you choose 0.5%, or maybe you paper trade and you don't actually take the trades, you just chart them, log them, put them in your trade journal, and go from there. If you don't manage your risk, you will get wrecked at some point, and you can make a ton of money, but you're just gambling. You can also lose the money, and that's what 95, 99% of people do. If you don't manage your risk, you're going to get wrecked. So let's try and calculate an example here. So Bitcoin, let's say it's at 60,000, and loss is going to be at an arbitrary point of 59,000. So it's $1,000 away from my entry, and I want to long it or buy. So I'm going to hit this, and this is saying that the max order size that I can buy is 0.1 BTC at a price of $60,000, assuming my capital of $10,000 and risking 1%. That means I can use a leverage of up to 48%. If I only put $100 in an isolated account, I'd be using approximately 48% leverage, and I would be buying 0.1 BTC at a price of $60,000 with a stop loss at $59,000. And so if it went the other way and I screwed it up, I got it wrong, and my stop loss hit, I only lose $100. I'm risking $100. And that's how you calculate risk. That's something you should do for every trade. But Tim, how the fuck do you work out where your entry and stop losses? Well, great question. Let's go and have a look at that. So, most importantly, what you need to know is that indicators are lagging. They're based off price data and what you can already see on the charts. And so by the time an indicator tells you to buy or sell, you probably missed the optimum entry. So today, the other thing we'll cover is horizontal support and resistance. So I'm going to use lines to make it obvious what I'm doing and where I'm putting them. But the reality is that if I put a line here, there is going to be a zone above and below that line, for example, where price will probably go somewhere around there. But what we're doing here, we're looking on the monthly chart, and we're going to be looking for monthly levels, then weekly levels, then daily levels. And once we've got all of that, and we think we're sitting somewhere that is a good point to enter, then we're going to go down and look at a 4-hour level to try and find the best possible entry that's going to line up with the price action that's occurring. So here, this chart, Ethereum BTC, and we're looking at the monthly. So the important thing to note here is to find your levels, you're looking for closes. Yes, you can use wicks or closes. Generally speaking, we use closes. And so obviously on a green candle where the price is going up, the close is here at the top of the candle, and this is the Japanese candlesticks. So that's a monthly close there. And so if I chuck a little label on that, let's call it monthly, we can see there's a monthly close there. And the reason this is an important monthly close is because this is the highest monthly close before we pivoted up here on this wick and changed direction. So we came down, we hit a pivot point, we changed up over the, obviously this is 2 months here, and then we changed and went back down, we swung down to the low. So if we take the same approach, obviously on a down candle or a red candle, an important line here is going to be where we had the monthly close at the low. What's the lowest monthly close? So in this case, this is still the lowest monthly close, and you can see price, although it dipped below it, never closed below it. And so it's the close of the red candle in a down and the close of a green candle. Those are your closes, never the opens, because price can just sort of open wherever, and people will try and manipulate that to some extent. So we also have, there are a couple of other obvious levels here. This one, we have a green monthly close here, and it's pretty much the monthly downtrend, so it came back to test it, and it's created that high low, even if you're looking at the closes. If you're struggling to see through wicks, you can change it to a line graph. Here you can see quite clearly, actually, where those monthly closes sit, because the line is drawn based on the candle closes. So it makes it really nice and obvious what's going on here. Nice double bottom here on ETHBTC. That's your close there. Pushed through it, rejected, tested, come back above. And so we've identified some key levels. Typically you read your chart from left to right, but you can go right to left and every candle is valid. So what you're looking for is where is the most price action happening. So we can see there are a lot of wicks and some bodies that are going into this zone in here. So I've just chucked a little zone over the top of it. Yes, it's the daily, ignore that. So now we've had a look here, and we probably have 1, 2 other ones up here. And we can probably ignore that middle one, because we've pushed up here, we've got a wick here. And so that's probably a big pivot point to close. And so we've got another monthly level there. So now we've identified a couple here, and then we're going to jump down to a weekly, and then you can kind of see what's going on here with all the little wicks, and a lot of price action happening here between where these wicks are hitting it, and then obviously where it's tap, 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 too many taps, smashed through it, came back, price tried to hold above, it's a bit of a fight around there, buyers, bulls tried to push it back up here on this inverted hammer, and then denied. You get the double hammer here, come back up, and there's obviously a lot more pressure happening here, your little sort of ascending triangle basically that's occurring here. Close above, and then you smash up. So if we look at some weekly levels on this, again, you're looking at the candle closes, but you're looking for things that are pivot points, or what you might hear people calling swings. So swing down to the low, there's your low, swing to the high, and if you're actually, depending on whose charts you're looking at, and if I can find what I'm looking for, right there to there, if I put it in the right place, this is what you call, well, what we would call a swing to the low. So you've got a pivot, high, creates the low, and that's your swing. And so price is going to go and try and do things around these swing points where you've got a trend change from a dump down to here, creates the lower low, swings down to the chart low here, or all-time low of this chart, which is Binance. So if we're going to chuck some weekly candles on here, where might we be looking? We've gone down here and we've got kind of a swing to a low there. And so we'll chuck a weekly level on here, just as an example. Again, another weekly sitting on that close there. And the other thing you can do, so I'm not sure, you could almost argue that this close here is a weekly up here. But you might also want to go and look over here at what's going on, and so there isn't really a hell of a lot. Yeah, there's a wick. There's a little bit of fighting around here as well, so that could be a weekly level. And if we go and have a look, there's probably another one sitting right in here, where you can see a bit of fighting happening somewhere around in there. And what you might find is that if we look left, that's probably a nicer level down here on this close of that bull hammer there. Because we pushed down, we couldn't close below the level. We got taps but no closes below it. You got to try it again, failed again, a whole bunch of down pressure, and then it dumps. So this looks like a really clean weekly level that we're looking at, and obviously we can see more wicks here and more wicks here. So price is really respecting that weekly level, and so this is what we're looking for, is where is that really nice clean line that goes right through, and price is really sort of oscillating around it. Well, there's a whole lot of fighting, and the fights result in gigantic dumps. So obviously this is quite a big dump where the fight went all the way down there. So failed, touched down here, came back, tried to gate it, no charts, big trends dump there. So that's monthly, weekly. Now obviously we're starting to get a whole lot of lines on the chart, but as we go down to, and this is daily candles here, you can see what's being respected. You can see what's going on, and you can see how prices fighting around this weekly level interchange. Tap, 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 fighting around it. And we can see, obviously, there's a lot more price action, sort of wicks and other things here happening on this daily. And what you really want to do on a daily chart here is identify, maybe at your weekly level, where is your trend going. Now, some people like to draw trend lines off the wicks, others draw it off the close. So you could chuck a trend in there, and you could reasonably say that there's a bit of fighting going on in here. You could alternatively see if there is a trend that we've got going through, but yeah, it's not really a thing there. So that's a real starter lesson here on identifying trends. Well, sorry, not so much on trends, on identifying horizontal support and resistance based on the closes. Yes, you can use the wicks, so have a play around and see what works for you, but the key is to look at these closes where there are pivot points, where they are swings, so they've gone, and the trend has changed direction. Gone from a low, changed up, bounced up, strong rejection, probably a nice level here, and it is, it's a monthly, based on that colour. and there is a lot of price action that happened, and we've identified that quite nicely off this one here. So you could pick it up earlier. Obviously, you could pick up a monthly close in here quite easily as well. And then you don't even need the weekly that we had in there. And we jump over there, and then you've got another monthly here, and now we're seeing wicks that are touching that monthly there as well. So that's a really quick lesson. To recap, if you are not using risk management, you're gambling. Generally, you'll see people using 1% risk. That's 1% of your total account. Doesn't matter where your account is sitting or how it's split up. It's 1% total loss that you're looking at per trade if a stop hits. In the next few series and videos, we'll look at adding more tools to a toolkit. So go and have practice, chuck some charts up, get some feedback. The more you do it, the easier it gets. Obviously, you want to try and keep it reasonably clean, but you do what works for you. Thanks for watching, and we'll catch you next time.